the VSA video. I'm delighted today to be joined by Executive Chairman Greg Liller and CEO Alex Langer of VSA, Madre, Gold and Silver. After a relative period of quiet, there's been significant news, so I'm delighted to be
Absolutely. Thanks for having us, Ali. It's always good to chat. So Sierra Madre Gold and Silver is a development company focused on the restart of the fully permitted past-producing La Guitarra silver and gold mine, which is located about a 2.5 hour drive outside of Mexico City. We purchased the mine about a year and a half ago from First Majestic Silver for $35 million US. That was an all-share transaction. They still really like the mine. They believe in it. So they weren't interested in cash. They were interested in shares at the time. So they are by far our largest shareholder, owning about 45% of the mine. The mine was put on care and maintenance in 2018. First Majestic still had a full staff there, so they had run the equipment and everything, kind of on a bi-monthly basis. So it's in really, really good shape. So over the last year and a half since we've acquired the mine, we've been upgrading the facilities, which we'll get into a little bit, with the expectation to hopefully commence commercial production in Q1 of 2025, so only 8 or 9 months away. Things have gone really well. The first thing we did was come out with an NI 43-101 resource report. Historically, there was a total of about 17 million ounces of silver. We in essence tripled that without doing any further drilling. The drill hole database is about 236,000 meters, which is pretty large, especially for a mine of the size, which is great. If you wanted to replicate that, it would probably cost you $40 million US and take a number of years to do so. So we really have a big leg up. So take that information, came out with a resource report, and now we'll be kind of pushing forward. Traditionally, a mine of this type, you'd do a feasibility study or pre-feas and a bankable feasibility study, then a definitive bankable feasibility study. But in this case, we know our costs pretty much inside and out. We have all the production records. Greg used to run and actually operate the mine, which we'll get into in a little bit. So a really strong history with the mine. So again, we know our costs, we know our energy costs, we know our man-hour costs, our reagent costs. In terms of feasibility study, you'd probably be spending close to $8 to $10 million the next few years, but more importantly, a lot of time. And with today's silver prices, quite a bit higher than we were expecting, which is really, really good. We are pushing towards possible production as soon as possible.
Brilliant. And I guess the first bit of news that came out from the company was support from your major shareholder, First Majestic, of a USD 5 million loan facility, which perhaps could take you a long way to achieving that target. So perhaps you can just outline the terms of that.
Yeah, absolutely. So we've been looking for a while. When we closed the transaction, I guess it was in March of 2023, we raised 10 million Canadian on the back of that at 65 cents per share. So we didn't have exactly a full understanding of how much capital we're going to need to complete all the necessary upgrades and readiness for the mine, whether that's underground equipment, whether that's underground, workings, fixing up the plant a little bit, things like that. So we did come up with a number earlier this year, and we had gone out almost like as a tender to various groups. We were looking at offtake, we were looking at royalty, we were looking obviously at equity and debt, and this was by far the most attractive and least dilutive for any of the shareholders. We really wanted to stay away from equity, as Greg and myself, outside of First Majestic, are two of the largest shareholders in the company. We've put in quite a bit of our own capital into this, and it just came together really quickly and quite elegantly. Obviously, First Majestic knows the mine inside and out. They really like the plan and our strategy of what we're doing there. We had a number of other offers, but this was clean and easy. So it's a 2-year term, 15% month interest, and that's pretty much all it is. So it's really easy. There's no warrant coverage. We have a 6-month payment holiday, so we don't actually have to start paying back that loan until 6 months after we drew down, which was about a month ago. We've been spending it pretty good over the last little while, especially ordering equipment and things like that. So it gives us quite a bit of time to work towards repaying that loan. We owe interest from 6 to 24 months, and then obviously a lump payment a lump sum payment at the end. We would never have taken on debt unless we felt we could, pay it back quite comfortably, and that's what we're expecting to do, and we should be able to do that. So we're really, really happy with the terms, and thankful to First Majestic for providing that capital for us.
Yeah, excellent. Well, I think it's always a good starting point to know that you've got the money to do everything that we're going to talk about in the rest of the interview. In terms of refurbishing the mill and the underground, what is there to do?
It's not a huge amount. I'll pass it over to Greg now. But again, it was in amazing shape. But something hasn't been running for the last number of years. There are a few little things that needed to be upgraded. But the mining fleet was a big part of that as well.
Yeah, essentially, when we took this on, we thought we'd have to buy new mining equipment. Had a much longer time span, but after looking at everything that was there, being pleasantly surprised by some of the stuff in the boneyard, the mining equipment that I thought was junk when I first saw it, turned out we could rebuild all of it. And so the mill itself was in great shape. All we've been really doing is going through some intensive preventative maintenance type stuff, and then just trying to get a leg up on sustaining the operation. So we've replaced a few pumps, rebuilt a bunch of pumps. Some of the plumbing was rusty, so we've replaced that. We've replated the fine ore bin. But mostly it's just it was in amazingly good shape. And so it became apparent we could get this thing into production a lot quicker than we thought we could. And so that's when we really started spending that 10 million Canadian we raised on the refurbishment program. And so I guess that really started in earnest last September. And we're almost finished with it. The only things we're lacking are a stopemate long hole drill. And I just saw the PO for that come in. And then jack legs, we got, 25 of them, more than you need. A lot of the piping, the air line, water line had been taken out of the mine and stockpiled. So he went through that, took the best parts of that, and then bought some new. And so that's all been replaced.
Perhaps worth highlighting that the different components of the plant all have various nameplate capacities.
Yeah.
So what are you actually trying to achieve in the first place?
Well, it goes anywhere from the 500 or 516 tons a day, to be precise, for the ball mills, up to the flotation circuits capable of 1,200 or 1,300 with a little bit of replumbing. So what we want to do is we'll start our test mining and then hit 350 tons a day, then go up to 500. Once we've hit that stable 350, then progressively move up to 500. And once that's stable and we've got a good stockpile built up, sufficient stopes ahead of us, then we're going to throw a new ball mill into the circuit. And the crushing circuit's good for 640. But if we put in, say, a 500, 700 ton a day ball mill to begin with, then our next step is to move up to 750. And that'll take a new cone crusher. But it can all be done within the existing circuit. So then once we're stable at 750, then we'll put in a new parallel crushing circuit and get up to 1,200 tons a day as the ultimate plan. But we're going to do it sequentially, step by step. Yeah. And once we hit that 750, that'll allow us to start really bringing the bulk tonnage online, because you need volume to make that work. And then we've got, just shy of 700,000 tons in the Los Angeles deposit alone. And once that comes online, that'll be real cheap. But we want to do this step by step.
Yeah, and that's a real key reason why the startup capex is so low. Alex mentioned that there's a slightly unconventional route to production. You're not doing a PFS, not doing a BFS, but I guess it's also unconventional in other ways. As Greg, you have a lot of experience with the project in the past, and as I understand the 43101 resource upgrade, a lot of that reinterpretation was done by you, bringing in old data sets, and that is also informing the mine plan. So how should investors look at the new resource, and how should they look at the plan for mining going forward without those desktop studies that they're used to seeing before mining commences?
We got to remember, this thing was already built. The plant was already built. The underground mines, both the Guitarra and the Colossa, are already developed. And so most of those studies involve what's the cost of building the plant, what's the cost of developing the mine. Well, our plant's already built. The mine's already developed. So you don't need 2/3 of the studies, 2/3 of the parts of the studies that go into making the a PFS or a bankable feasibility study or whatnot, because it's already built. So it was like, why would we want to waste the money to do that when all we had to do was firm up our resource, and then we can start going with the test mining and developing the stopes. And then as we progress with the production, the idea is that eventually we'll have all the costs nailed down, everything else, and then we'll come out with a reserve number. And that might take a year's worth of production. But it was just, why waste the time and money when the thing's already ready to go? So it's a very unique situation. And the other thing that's unique is that the entire crew, both the people I brought on and the people that were there that with First Majestic that came with us, they've all got production experience with us. Our general manager, Francisco Correo, he was my junior planning engineer 18 years ago at this mine. And he's really progressed professionally. He was general manager 2 times for First Majestic. He was kind of their guy that puts out fires. And so he was very anxious to come back to the mine. The miners that we've hired, and I don't know what we have now, 130 new hires.
Yeah, 130 plus 82 employees. So we're fully staffed up.
Yeah, it's kind of a lot of responsibility. But no, almost all of them worked at the mine before. Although a few of the younger ones commented to Luis Saenz, our director of exploration and development. He goes, "Oh, I was just a little kid when you were here last." So yeah. Anyway, so, and all these people want to see this work because their families stayed, and the miners left to work someplace else. So yeah, we get to kind of pick and choose and bring back the best. But it all is it's not something that it's just, these guys all have the experience. It's not what amounts to a desktop study. It's what feasibility studies really are. They're desktop studies. We've got the hands-on experienced people there to run it. And like I said, it's all built. So it's a very unique situation to move through. And the other thing too is why spend money on overhead and G&A when you can spend that money getting the thing up and running? So.
The other aspect that's difficult to put into published reports is a lot of the recent past production came from Mineralised backfill, and you've mentioned that's something that you're looking to do as well. So how significant is that going to be in the early period of production?
Put it this way, there's hundreds of thousands of tons of this mineralized backfill in these old stopes. And they're in primarily the stopes, or they're almost all of the stuff that was mined back in the 90s. And gold at that time was probably somewhere between 325 to 416 in 1996. And then it plunged down to 250. And silver, was just floating around between $4 and $6. So they had to be mining very high grade material in order to make a profit. And so anything that didn't meet that cutoff, which was, they used a gold equivalent cutoff of somewhere between 8 and 10 grams. Anything that didn't meet that cutoff, they used as backfill material, or they left behind in pillars. There's one now that we actually just started drilling on it yesterday. Lewisman had these two stopes, high grade stopes, and then they put a ramp up right in the middle of the vein between the two of them. And it's nicely developed so that we can go in every 30 meters where it intersects and just take it out, dropping it down. We'll lose the ramp, but it's in ore. And then adjacent to those is this backfill material. So, we're going to have to rebuild the ramp or do another hillside access eventually. But once that's taken out, we don't need to get back in there for a while. Or we can use the upper levels and just use the ore chutes to drop it down. But I was driving through that just the other week. And it was pretty amazing. And then they've now cleaned up the exposures. And this one is a nice breccia that's just cemented argentite and galena, argentiferous galena. So it's it's very, very interesting situation. I'll put it that way.
And you mentioned that you've got a really good understanding of the historic data, the recoveries, grades, a lot of the factors that go into the economics. There has obviously been a big jump in inflation between 2018 when the mine last operated and today. So what are the things that you're going to have to do differently, if any, to counteract that?
Well, we've compiled all the data, all the cost data, and then just we've plugged in modern prices into all of it.
So historically, the mine, had a kind of a cost of around $13 all in sustaining cost. To give you an idea, inflation is higher, especially on the reagent side, but manpower is relatively similar to what it was back then. Again, we'll be able to hire, if they could choose kind of the best. So we're expecting relatively similar costs. Energy costs in Mexico have actually come down. It is subsidized by the government. So we're not going to be too far out of line with historic numbers. Obviously, it'll be a bit higher, but it's not going to be exponentially higher. I know when we were doing the due diligence from the mine, silver dropped to $18 an ounce, and Greg, myself, we were thrilled to be able to acquire the mine, even though silver's at 18. Now that it's 30 plus, we're delighted. So it's a lot of margin. I don't expect us to make too many mistakes, but if we do, there's quite a bit there that we can play with. So in terms of the costs associated with what we're mining and where we're mining, we're here to make a profit. I think that's number one. So we're always going to be cognizant of costs and what that looks like.
The other thing too is First Majestic is a large corporation, so their overhead, their indirect costs that they applied to the mines are something that a lot of that we're not going to incur, just because we are small and lean.
Yeah.
So that'll help counteract that inflation to some degree also.
And the other key announcement that came out recently was in relation to tailings. So can you run through the changes to the permitting, but also the potential production scenario from tailings as well?
My biggest worry when we made the decision to move forward to production was where
We
we're going
haven't
to put
quite
the
made that
tailings.
decision yet. Just as a heads up, we're
No.
still thinking about it.
Yeah, we're going to be test mining first. But my biggest worry was running out of tailings space, and then having to build the permitted phase 4, which is a 5.8 million ton facility. But it's expensive. It was expensive to build. So we had a hard look at the tailings, and had Stantec come down, and they did some desktops. Another Mexican firm, HighCorp, did some also desktops and volume calculations. And both of them came up with potential capacity of 500,000 more tons of dry stack tailings on top of the existing permitted facility. We've got about 230,000 tons roughly of conventional deposition area left, which is good for 15 months at 500 tons a day or 22 months at 350. But that gives us time to do something, to convert this dry stack. So the big thing was getting this the permit approval for the modification of the environmental impact statement. At the same time, we've got a permit now to put dry tailings underground, but we're going, well, maybe we can get even more capacity if we go wet, and so we got that permitted also. And then just before I left the mine site, a week before last, the plant guys told me, oh, the existing tailings pumps can be used for the paste fill underground, which that was quite a pleasant surprise for me. And the paste fill will involve having a thickener, as will the dry stack. So this thickener that was permitted, actually the foundations were already laid for it. First Majestic did that. We'll install that thickener, and then it serves double duty between the dry stack and the paste backfill. And initially, the stopes that we're planning on using this paste backfill in will be some of that Ratakis, the backfill material, but it's below the main haulage way, which is, 10, 15 meters above where the tailings exit plant. And the pump capacity is fine for getting it up there. And then once it's up there, it's downhill all the way. So that'll be a pretty low cost exercise, we hope. We're still in the middle of getting it designed, but just having these two permits then gives us time to get things designed to do it right the first time. So, but again, a lot of this dry stack layout was already done by First Majestic when they permitted the phase 4 tailings area. The only thing we wanted to do was put it in the footprint of the existing tailings, the filter plant in the existing footprint of the mine as it stands now. So no, there was that was two big milestones for us, and it took a lot of worry off me. So
good. And in that same announcement, there was also talk of drill pad permitting, which is possibly for mine plan definition, but also exploring the exploration potential in the wider license area, which is around 40,000 hectares, far larger than the mine footprint. So perhaps you can talk a bit to both of those areas.
The permitted holes that we just got, like you said, there's 58 drill pads permitted, which you can drill multiple holes off each pad. We pretty much focused on what we call the West District, the Guitarra area, And so there's a whole two vein systems that Las Palmas, Incas, and Santa Teresa, which are north of the existing workings by about, I think the furthest point being 800 meters horizontal distance, because we actually looked at drilling it from underground too. These have never been drilled. We've been doing a lot of surface sampling and mapping in the area and preparation for defining some drill targets. We've gone in the underground workings and done sampling there. So now that we've got a lot of this data, we'll get that all put together and then get a drill program. However, I don't really want to use borrowed money to drill holes. So once our test mining's underway, we'll see what happens with that, but maybe we can finance some of the drilling of that.
Excellent. Alex, perhaps to finish, you can run us through the timeline, any other catalysts ahead of that start of test mining Q1 2025.
Absolutely. So the next big catalyst list for us will be confirming our offtake. We've had quite a bit of interest in it. It's a really clean product. It looks like a lot of companies can blend it. It's higher grade than some of the other materials in the area. So you can blend it with some lower grade material and actually increase your recovery. So we've had quite a few offers, some very favorable terms, and that should be announced over the next week or two. We have to have that in place over the next little while. So we've guided to commercial production for Q1 of 2025, which is at 500 tons per day. But as Greg has kind of alluded to, things have gone really, really well. So with today's silver price to everything we're working towards, there is an opportunity to perhaps start test mining relatively quicker than we had planned, which is great. We now have the space in the tailings, so we're very comfortable with that. It gives us a lot of optionality moving forward. So there could be some very, very exciting news in the not too distant future. Things have gone really well. We are fully staffed up now. We ordered the stope mate, so things are really progressing well. So I'm pretty confident we'll be able to hit that commercial production Q1 2025. And hopefully test mining in the relatively not too distant future if everything still continues to go well.
Brilliant. Well, look, thank you both for taking the time to talk to me. It's a really exciting project and company, and now we have the commodity price tailwinds to go with it. So we'll look forward to all of those updates in the coming months.
Awesome. Thank you, Ollie.
Thanks, Ollie.